Hello, hello, hello. Let's get the microphone check out of the way this morning. Well, this morning for me. May not be for some of you. But welcome for those of you that are just joining the non-public stream live chat over there. And for those of you that are waiting on YouTube, thank you for showing up. Can you please let me know if you can hear the microphone okay? And we're going to get started in about a minute here. All right, let's go ahead and get the music under control now that I know everyone can hear me okay. Bring this down. All right. And we're going to roll into today's Macro Monday live stream. Hello and welcome to Landy's Crypto Corner for Macro Monday Market Analysis live here on November 13th, 2023. At least I think that's what today is. I can't quite remember. Yes, it is the 13th. Good. All right, we're going to get rolling into investigating what might happen with Bitcoin, Dixie, and traditional markets today. We'll also take a look at gold. I did forget to put that in the description, but we will be looking at that as well. We are going to start with Bitcoin here. We're going to use the Bitcoin in 60 seconds chart to start. And of course, if you don't know, I do short videos. Typically daily, unless the market is just going sideways lately, as you don't need to hear me saying the same targets over and over again, unless there's something urgent that I feel that you should pay attention to, such as a move that might be imminent. So far, we have not seen that the past few days, so it has been a little light on the Bitcoin in 60 seconds content as of late, as Bitcoin has been going sideways since breaching this weekly here and closing above the weekly at 36,200 to 300 on the daily. So, but typically I do a Bitcoin in 60 seconds video after close each day. That would be 4 p.m. Pacific Standard Time. And in this case, I haven't had really any reason to do one. I will have one later today reviewing the weekly outlook. And this is the chart that I use on that particular shorts video that is posted to, here on YouTube. It is also on x.com, formerly known as Twitter, when that goes live after close. So I will be looking at the weekly during that video today, and we're going to discuss it here on the live stream. But let's take a look at the daily rather. And we can see that Bitcoin is trading in between these two weeklies at 36,200 to the downside, and the top side here falling just shy of this 37.7 at around that 37.5 rather area. Now, not too much to be said about this, quite honestly. This is kind of to be expected. So, Bitcoin kind of stalling out in a very important region. One that we've had marked for quite some time. Now, if it does lose the upper first and subsequently this weekly here at around that 36.2 to 3. I would look for it to trade somewhere, a little bit further down to $36,000 or so at the wick high here, to the close open at around 35.4 to 5. Now, if it does lose that, I would look for a run back to the basis here at around 35.3 to this monthly support at 35K. Below there, keep an eye on that weekly at 34,750 to the lower first. Now, that lower first is coming in at around 34,300, kind of cutting across the lows of this prior consolidation before breaking up. Below there, keep an eye on the close open at around $34,000, $33,900 to $34,000 to the wick low area, right around this lower second standard deviation coming in at 33,200. If that is dropped, I would look for a test of this daily support resistance area at 32.4. This is untested. Down to this daily, weekly, and monthly level. You've heard me talk about this one an awful lot over the last few months, quite honestly, at 31.8. Prior to the test of this area back in July, we had been talking about it on the top that was put in around those weeklies at 30,600 and 300 respectively. So, that would be the main area that I'd be looking for. If we did see that daily, weekly, and monthly area breakdown, I would look to those weeklies down there. You can see all the daily wicks coming into those weekly areas at 30,300 to 600. You see the closes up against there as well from April. You see the price action oscillating around it in late June to mid-July as well. So very important area if you do see that daily, weekly, monthly level retested and it not hold up. Again, it was only a daily wick in there anyway. The important closures are going to be those weeklies there at the 30,006 to 3 area, or 3 to 6 if you like. But in this case, not looking for too much more unless we start seeing this monthly and weekly level breakdown and then subsequently see closures below the daily lower second standard deviation. Again, that is at 33,200. Now, if we do see Bitcoin trade back above the upper second here at 37,460 to 37,500, keep an eye on that weekly at 37,700 to 38K, where the wick high is coming in. Above there, I would target the monthly at around 38,500 to the weekly just above at $39,000 to $40,000. Yes, it's at $39,000, but I do think if price starts to push that way, we might even see a wick above somewhere around 40,000, maybe even higher. Quite frankly, if we do see closures above there, and I would prefer to see dailies, maybe a 2-day or 3-day above there. If we did see a closure above that weekly at 39 to 40K, then I would start targeting the weekly up here at $41,800 to $42,000, maybe more over time. We'll look at that on the longer term timeframes as we get into it. Looking at the Stoke momentum oscillator here, this is a regular Stoke. Again, for those of you that have asked that might be new to the channel, sorry about the creaky microphone stand there. I do need to oil the hinges on this thing, even though it's not supposed to need it. It creaks all over the place. Sorry. But for those of you that might be new to the channel here, this is not a Stoke RSI. Stoke RSI measures the velocity of RSI, or the volatility of RSI, if you like. And in this case, this is reading close over close price action. So this is just a regular Stoke. It's running a 6.314 on the K and D read. And the 14 is the look back period. The 14 is the length, rather. 6.3 on the K and D. 14 is the look back. I'm sorry, man. That's one of those days, huh? 6.314 is the period length. And 255 is the look back. There we go. We got it. All right. Now, close over close momentum is preferable to be looking at in situations where you see high level consolidation on a high like this as well. Kind of gives you the bias that, this is in the bullish control zone right now. So it is going to remain bullish, but it has a larger opportunity to fall much further, right, in terms of momentum. Now that's where we start looking at Bitcoin heading to the downside. We would then see the momentum oscillator continuing to head down. And then we're looking at those major areas of support that line up with our Bollinger Band set that we have on right now. For those of you that are unfamiliar with the Bollinger Band set that I'm using, I'll get into that in just a moment. We have 37,250 or so on the momentum pivot for this Stochastic oscillator. To get back into the overbought zone, we do need to see price trade and close above $38,000. And the oversold zone is down there at 23,800. Now, this is going to change quite a lot close over close. So I would not necessarily be using the overbought and oversold zones as like, okay, if it gets all the way down to the oversold zone, it's definitely going to be that price. This is going to update day over day, and that number is going to rise. And because we do see the oscillator near the top side around the highs, the overbought zone is a little bit more relevant in terms of its price level, and the oversold zone not quite as much, as it is around the 77 read right now for the K and the D read. And if Bitcoin does close back above 37,250, we will see the oscillator pivot back to the upside here, thus providing more pressure up. Now, I really don't have an opinion as to which way Bitcoin's going to break. I will point you to the lower term timeframes though, and that's where we might be able to find an edge to see which direction or which support and or resistance areas Bitcoin is likely to test. In this case, we can see that we have tight Bollinger Band contraction on the 4-hour, and it is beginning to show the signs of expansion to the downside. Now, one of the things that I am going to caution you about is when you're in a range between two big support and resistance areas, I'm really not looking too much further to the downside than that 36.2. And only if I see that area break down will I be looking for more. Because that area is likely, if Bitcoin does expand down there on the 4-hour, is likely to get a reaction. Now, if it does not get a reaction, it just slices through, you're not just going to see the 4-hour get expansion on the Bollinger Bands. You'll also see the 6-hour and so on and so forth up the time frames. But again, this is all just mean reversion, right? We could see downside expansion on the 4-hour, which would be mean reversion on the daily, right? So that would be right around that upper first and weekly area at that 36,200 to 300 zone. You can actually, the upper first is rather at 36,400. Man, I'm just mixing up all my words today. All right, so we can see that we are seeing the etchings of expansion on the 4-hour Bollinger Bands. And here's how you can confirm whether or not we're going to see expansion much further down, right? And that would be much further down respective to the consolidation that we're seeing at the moment. If we do see closures below the lower second at 36,790 in the next 4-hour candle, the next tick, I would want to see continuation, meaning another closure below that lower second. If we don't see that and price regains it, then we look to the the lower first at around 36,900. It's probably going to replace where the lower second currently is, as we do see that, expansion is starting with the 4-hour here, but it's really not rolling just yet. Maybe above a 20 and above a 15 or 20 on the moving average. You know what? I would actually say for this, probably above a 15 on the moving average, we would want to see for confirmed expansion. Now, don't confuse confirmed expansion with it's going to drop aggressively. All that means is that the bands will open up a little bit more, providing some more downside directional volatility as Bitcoin is currently trading below the basis band. But the lower second and third standard deviations typically act as reversal or continuation areas. In this case, if we see the lower second close below in the next 4-hour candle below around that 36,780, 36,800 area, then we would be at minimum looking for the next candle to test the low wicks here. If we do see a breakdown of these low wicks at around 36,550, then I would be looking for a test down into this low side structure just above that weekly there. So I would give it that zone around 36,2 to 4 or so. And then if we see closures below there, we can start looking at something like the 6-hour getting further expansion to the downside, as that would be below the lower second standard deviation, which is coming in at 36,540 right now. Now, this is not going to close for quite a while, so the 4-hour is definitely going to be the edge in that regard. But because we do see that Bollinger Bands are pinching together quite aggressively here, the 6-hour would be the next logical thing to look at. And it's likely that we see shorter term time frame bounces in there. Now, the hourly is expanding to the downside, of course. This is mean reversion on something like the 6-hour. We do see a nice bounce off that lower second after closing below it in the last 1-hour candle. If we do see a closure above it, we look to the lower first, and that is at 36,800. Again, a pivot area. And the 4-hour is likely to hinge on that hourly regaining that 36,800. So if we do see 36,800 regained on the hourly at around that 4-hour close, the 4-hour close is in 1 hour and 16 minutes. So that will be something to watch for coming into the next 4-hour close open, that being the last 4-hour candle of the day. So the next 4-hour close open is coming in. I'm sorry, we'll have 2 more. We'll have 2 more. I'm a little goofed up because I'm starting the stream at a different time. So we'll have the 12-hour candle. No, it will be the last 4-hour candle of the day. Time change is really goofing with me here. All right, so and we can see hourly is turned to the upside here. 2 hours probably following through pretty soon as well. In terms of shorter term time frame momentum, 36,830. This is going to be closing with the next 4-hour candles. So I would keep an eye on the 2-hour, 4-hour setup. We do see expansion, but realistically, keep an eye on the upside lower first to the basis on both of these areas. And that would be, around the 36,800 to 900 area basis for the 2 hours coming in at $37,000. So above $37,000, I do think we go and test the top side of this consolidation structure up there. If it does reject on the low side, you'll see it most likely reject around these close opens here at around 37,000 right there at the basis. So above there, be looking for it to test up again into the mid to low $37,000 area. So there's a little bit of short-term time frame for you. Let's go through some of the longer-term time frames. We've got the 2-day that just opened. We can see that very important area right by the weekly here at that 36,200 down to the upper first here at $36,000 is going to be the important area to watch should Bitcoin continue to head down on the daily especially and start to break down below there, because the 2-day time frame would start to point towards this heading back towards that monthly at $35,000 to the weekly here at 34,750, and then below there the 2-day basis band is right now lining up with that 32,400 area. That would put in a pretty significant top. Doesn't mean that we're still in higher low territory, so doesn't really mean too much until we either saw a lower high or break down much further that led to another lower high. We still would need to see a lower high for this to really turn bearish. So not seeing the signs of that just yet, or a high for that matter on some of these time frames. The 3 days going to close the next 2-day candle. Will of course follow up with this on Monday. We do see where's the upper first right there at 34,500, just below that weekly at 34,750. The upper second on the 3-day is up there at the monthly at 38.5, thus making this the next upside target for the 3-day should we see that weekly and wick high tested again. Again, that weekly is 37.7 to the wick high at 38K. Next logical area is that monthly anyway at 38.5. Now the 3-day momentum pivot is above price currently at 36,923, so it would turn down, but remember it can stay up here for quite a while. We'll go back and look at the 2 days while it's at $37,000. So above $37,000, I do think things push further. The 4-day is going to be, It's going to be closing towards the end of the week here. We'll follow up with this one on Friday when it does have its close open coming into Friday's candle. Now, in this case, upper first is down here at 33,860. I suspect that will be somewhere around the $34,000 region. The upper second just above this weekly here coming in at 38K right at the wick highs. This is still, I believe, pressure up on the 4-day as well. It is for the moment 36,275 is going to be the momentum pivot for the 4-day. So something to watch on this weekly is, it might just be pointing to this area being, kind of the end of this impulsive move up, looking for a little bit of sideways and down consolidation and some tests lower. The 5-day is also pivoted at 36,100. This is closing midweek this week, coming into our Thursday candle. And upper second has been ran. It did get closed above. We do see that Bitcoin is oscillating around that upper second area at $37,000. Again, below there. The supports to the downside are fair game. Down to that upper first are still very, very bullish for momentum at 33,134. And of course, there's that ever important support level at that daily at 32.4 to 31.8, just below it. If we did see that area dropped, we got the weeklies there at the 30,600 to 300. The basis is now coming in at 29,200 or so. Realistically, this move is still ongoing above $36,000 here at that momentum pivot on the 5-day. So something to watch this week as well. And then, of course, we've got the weekly, which is pivoted at $30,000. So the weekly is very aggressive in terms of its pivot number, which leads me to believe, as you can see here, looking at Bitcoin, just back testing that upper second standard deviation right now at 36,586 or so, that 36.5 area. This would lead me to believe on the weekly that this move is, it's still got legs. We might see momentum oscillators turn on the daily, but it's more about the volatility to the upside. So as long as Bitcoin is holding this, 36,200 level to 36.5, it's looking good for continuation. And would still look good for continuation to the upside from the volatility standpoint, as long as it's closing above the upper first standard deviation at 33,000 to 33,100. Below there, again, same areas to the downside are fair game in terms of support and resistance, and the basis is now coming in at 29,500. So, basis is kind of, right around that momentum pivot as well. Did we get a 2-week? No, we have a 2-week at the end of this weekly. So again, we see that the upper second right there lining up with that weekly at 34,750 to 34,800 area. Upper first coming into the bottom side of this daily, weekly, and monthly area at 31.8. And we have the basis band now above that weekly there at $28,000, coming in at 28,200 to 300 on the basis. Now the 2-week is still heavily pointed to the upside, and the momentum pivot is actually not as far away as the weekly, which is why I like that weekly so much so far. And this is at 31,600. So, trading above that daily, weekly, monthly level is good. For momentum on the 2-week. When looking at the 3-week, which we just had a close open on, I believe. Yes, we did. We can see that zooming in here so we can actually get a little bit clearer picture around our support and resistances. We had the closure above the upper second. We now have the upper second right there at that 37.7 to 38K weekly overhead. If we start seeing it push above there, and especially close above there, you're going to see aggressive expansion on the 3-week. Now, the 3 weeks momentum pivot is going to be at 32,800. So you do want to see the local range, kind of hold. Now, this is good for another 20 days, bringing us through the end of the month. So you do want to see this area hold in terms of the momentum pivot number, at least on a close over close basis. As if we do see it close below 32,800, what we'll see is an initial cross down, and the momentum pivot will shoot to the highs somewhere around the $37,500 to $38,000 level. The 4-week is also closing with the next 3-week candle. I did want to call this out as the 4-week is pivoted a little bit closer there at around $34,000. It is in the overbought zone. Nothing crazy yet. We are seeing, and we'll go to a chart that doesn't have all of the support and resistance on it for just a moment. And I want to show you the Bollinger Band setup on the 4-week. So you can see that the Bollinger Band setup is basically neutral right now. We don't have the basis pointed up. So like the 3-week basis is pointed up, 2-week basis is pointed up, weekly it is kind of neutral actually, to be quite honest, but it is pointed up. I guess you could say that the weekly and the 4-week are kind of neutral right now in terms of the basis band. That, longer the Bitcoin closes those weeklies above the basis band will start to increase its curvature to the upside as long as Bitcoin is not heading back towards it aggressively. But in this case, we're coming off of, the basis band being pointed to the downside here, which does have the potential to get tested again. And it's just a matter of where is the basis band when Bitcoin goes in for a retest of it on the 4-week. In this case, it's right now at 25,129, coming in right at those 4-week lows. Now, it did close above the upper second, and it is trading above the upper second at 35,575 there. But I want to call your attention to the Bollinger Band setup. The reason why you're seeing the Bollinger Band and volatility setup rather kind of oscillate around the moving average here is because prior, when we saw the move to the downside here, we saw volatility cooling down from this time frame, and now we're seeing it tick up as it went around the basis, but the mean reversion back to the basis did cause a pinch in the Bollinger Bands, which was this cool down up here in volatility right here. And now it is kind of in the middle of a mean reversion back to the top side. So it's still showing signs of a bigger consolidation. That will change in this next 4-week closure, which again will be closing with the next 3-week candle. And that's if we see Bitcoin closing above 35,575, we will see volatility move back up. And in that case, we will also see the Bollinger Bands expand and then volatility agree with the Bollinger Band expansion to the upside. Yes, we have a first tick expansion and we have unconfirmed expansion in this candle. So we did see it. Well, I apologize. We saw a further compression on the close above the upper second, right? And then now this is the candle that needs to kick off that expansion. That's what I meant to say. So closure in the next 20 days and 6 hours above 35, 600 or so would kick that expansion off and confirm it to the upside, confirm that Bollinger Band expansion along with the volatility expansion of the Bollinger Bands from the BBWP perspective. Now, again, I want to caution everyone, and I spent a lot of time on this last week, but the upper second standard deviation at 38,200 to 38,500 or so, right around this low on a close on the monthly, is an area that's either going to act as a first pass rejection, could act as a reversal zone like in 2019 as well, but usually it's either a first pass rejection or it closes above, thus kicking off aggressive expansion to the upside. And the 4-week, disagrees with expansion to the upside right now until we see that closure later this month into early next month. But the monthly already has confirmed expansion above the upper first. And if we start to see it confirm that expansion above the upper second, even if we see a local high put in, it's usually going to keep tracking in that direction. And what will likely happen is the basis band will either flatten out and or just start to move up with that initial expansion of the Bollinger Bands, right? So we do have price about, and it is worth measuring this, by the way. Which tool do I want here? I want the we'll just do price range. And we could take the basis band, just get a rough idea. It's about 41% above the basis band at the moment. So basis band's coming in at right around 26,000 to 26,100. Price is trading at around 36,750. So yeah, man, we're likely to see, if Bitcoin closes where it is here or higher, or above the upper first, we're likely to see the basis curl around, possibly even start pointing up. That, would be a pretty good indication that things are going to head up. And even if it puts in a high in the monthly, that it's likely going to get picked up. The other thing is, if we do see confirmed expansion on the upper second, I've said this many times before, but we have always seen Bitcoin make new all-time highs. But typically when we have seen the upper second standard deviation closed above in the monthly, there hasn't been immediate overhead resistance like we have over here on the monthly at 45.5 to the wick highs there at 48.250 or so. Now, that would be the next logical area to be looking for price to head to. Should we see a closure above the upper second that kicks off that initial expansion aggressively in this case? But I can't fade what the analysis is from Bitcoin. Every time it's closed above the upper second on the monthly time frame, that expansion has led to a new all-time high. So above that 48,240, it's pretty much green light to go test the highs again, 60, 61, 63, and then 65 and 69K up there, and probably higher, probably make a new all-time high. That will also likely lead into what we've been talking about on the quarterly here, which is we do have a quarterly turn on Stoke. Momentum pivots down there at 24,400. It's already started to point to the upside. The monthly Stoke pivot, just to reiterate, is at 27,400. So far, so good. It does look as though if Bitcoin can hold itself together, go sideways, and keep trying higher after a little bit of mean reversion on some of these lower term timeframes, that this monthly leading into the December quarterly close is likely to turn the 3-month completely to the upside. We already have an initial cross on the quarterly or 3-month, and I would be looking for that to follow through. Do note that the upper first standard deviation is at $40,000. It's one of the reasons why we have that weekly there at 39 to 40K as a target. Above there, you've got the quarterly close open, which is important, around 46,200. And we've got some wick highs around that upper second at 55.8. These will become areas of interest if Bitcoin does start to break out to the upside again. And then we've got the quarterly close open at 58,800. Above there, the upper third, right above the highs there at 71,300. I wouldn't be surprised to see the upper third tested, by the way. And fairly quickly, should we see the upper second closed above on the quarterly? I do want to note that the quarterly is still in a contraction phase. It's let's go ahead to a longer chart like the index here. You'll see that those are the monthlies that I had marked off. You can ignore those for right now, but quarterly is still in a contraction phase. But when it gets that expansion, it's pretty abrupt. It's usually from one close to another. So, maybe one more tick if it doesn't do it this. It would be one more tick and maybe a following tick on that in the first quarter of next year if it doesn't complete this quarter into the first quarter by increasing that volatility. What would increase that volatility? Closures above the upper first will start to turn that back up pretty aggressively, and closures above the upper second, of course, at 55,760 would really kick that off and likely confirm it all in one shot. So be aware of that. And, it does remain to be seen, because it's the first time that we've seen, Bitcoin close underneath the basis or swing the basis band on the quarterly. And this is just kind of a natural thing to occur as Bitcoin ages as an asset here. But I do suspect maybe, and this would lead to a much larger run, and we'll talk about this if and when we do see this, not if, but when we do see this. But it might actually keep going lower, even closing above the upper first. That is an idea that I've been contemplating. We'll have to see it. So if we do see a closure above the upper first at $40,000 on the quarterly, let's say by the end of the year or first quarter next year, whatever you want to call it, we could still see BBWP heading to the downside. It's got about a 10% spread on it. That would mean that it would have to get one or two closes above the upper second to even kick off the expansion, which, by the way, would be making headway on those timeframes lower than the quarterly. And that would point to some kind of ridiculous targets to the upside, just so you know. But we're not going to talk about that right now. We're going to talk about the 2 month. So don't forget about the 2 month. The 2 month or the bi-monthly, if you like, just did its close open. It's going to be closing with the quarterly as well. So it is relevant to be speaking about. 33,682 or 33.7 is where the basis is positioned. The upper first standard deviation there at 46,716. If Bitcoin does start to really make some headway, push above the monthly at 38.5 and start pushing into the 40s, you're likely to see this around that wick high at 48 to 48,250, 48.5 area as the bands would adjust. So this is if we do see this, head up before it closes at the end of December with the quarterly. And I want to note that BBWP, again, very low. This is just coming off the basis band. We're not looking at expansion yet. We're looking at contraction. Holy crap, man. Just so you know, it is highly unlikely that this is going to expand to the downside. I want to point this out. There's a lot of people that, it's going to, wait for this. It's contracting just so it can wind up and take everybody out. I'm sorry, but if this was going to get expansion to the downside, it would have to close below $7,616, which would basically expand it to zero. I highly doubt that's going to happen. This thing is setting up for a rip your face off move to the upside. Whenever that happens, it's going to be big. So, closures above the upper second, which, to be fair, at the highs here at around $60,000, just shy there at 59,750. But above there, we're seeing contraction on the Bollinger Bands on the bi-monthly here. Man, this thing it could take forever to go sideways, but this expansion is, I'm going to tell you, in my experience, it's going to result to the upside. It's almost mathematically impossible for it to result to the downside. And I will tell you that doesn't mean that it can't oscillate around, right? Between the upper first and lower first. So just make note of that. Just because it's in this contraction phase and contracting further right now, it's going to keep that look as long as it's above, the basis or around the basis to the upper first or below the basis to the lower first. Lower first is coming in at 20,650, by the way. So really it's right around the high side of the lows. And, let's remind ourselves what we saw a test of back here in 2020. It was a test of the high side of the lows. So, in my opinion, I don't think it's very likely right now. I think that we might leave 20,000 behind. But if we do see a scenario play out like the 19 into 2020 crash, that lower first, same exact setup right there at the high side of the lows. That would be the logical area to look for a retest. I think that's a little too kind to those who would be late to the party. But we've seen it before, so we can't rule it out. We aren't seeing the same expansion look on the monthly, which is what this main chart is over here. This is, expanding from these lows. Confirmed expansion on the monthly has typically led to, this marching on to get above the upper second standard deviation. We didn't, the 2019 high that was put in was not put in on this low expansion. It was actually put in on mean reversion. And the expansion occurred to the downside. We saw the residual expansion off the rejection back to the basis and then the cool down. when we have already seen the confirmed expansion coming into a test of the highs here, it has, really it has resulted in a move to the upside. Now it did get slight expansion, but it was kind of chopping around. We haven't seen a smooth dip, I should say. So we had kind of this choppy mean reversion play as it was moving to the upside, and then it flipped above and then got like slight expansion on the rejection. That's not what you're looking for. You're looking for a smooth drawdown in volatility to an uptrend in volatility. We have a nice smooth drawdown in volatility to an uptrend in volatility. Same when we were on the highs, high volatility at the highs. And we saw this cool down, we got high volatility at the highs. We saw the cool down happen at the highs on the double top up there, and then the expansion to the downside. In this case, it's expanding to the upside. I can't fight that. And if we did see, we're not going to see it basically, even if it moves back down or puts in a high in the monthly, you're not going to see this go into a full cool down contraction. You might see it come back and test the basis, or the basis. This is not the basis. This is a moving average. And in this case, you might see it test the moving average. But in all instances, I would say that's more opportunity than not. Of course, this is not financial advice. But that would probably be a retest of the basis there at around $26,000. Really don't want to see any kind of monthlies closing back below this low at $25,000 or so. But yeah, this looks, telling you, that 2-month and that quarterly, we might be in for a very interesting setup when things do start moving. And, daily is sideways and up. In fact, I mean, the bands here on the daily, just so you know, this kind of a look on the bands gives price gives price the freedom rather to move between the bands pretty easily, especially between the upper second and lower second. And, the lower second is still within the look of the range here between this close open at 33,100 to 33K and this low here at around 33,400. The lower second is going to keep ticking up. We see the sideways and up move on the basis band here. And I will call out one indicator that I wouldn't be using to trade, but the sentiment range MA by Chart Prime is pretty neat. If you do put this on your chart, I'm using a 40 length 5 trigger smooth. This was from a friend of mine suggested this to me. Chart Prime they're the guys I believe that are working with some of the developers from Crown's Crypto Cave, and they always have made good indicators from what I can see. The developers, at least, that they have. And this was some suggested settings, I believe, from a video that a friend of mine watched. And then he had me backtest some kind of a strategy that looked okay, I guess. Not something I would trade, but what I did like is the sentiment range, especially on the settings that he gave me, which was the 40 length, 5 smoothing, ATR length 200, range multiplier 10, and the time frame, the 4 hours specifically, he had made mention, and I believe the developers had mentioned that it works best on the 4 hour and daily. And one of the things that I like about this, when you go to some of the lower term timeframes, it kind of gives you the directional bias. The directional bias, not necessarily for trading, but, for ranging. So when you see it, flip-flopping back and forth here, we're in a ranging market. Price gets significantly above it. And, it's kind of following, getting close to it. We find support on it, in and around that area. And the funny part is if you match this with regular MAs and EMAs, you'll find a lot of confluences. Now, I'm not going to do that right now. You can do that for yourself. I'm not using it to trade based off of. I just thought it was interesting the way that this had some confluences with other indicators, specifically when we have bands on, and like the lower second being a nice reversal or continuation zone, kind of lining up at this last low prior to this move up. And this last low was at 34,540 or so. Again, this is a free indicator. You can pick it up on TradingView in the indicators tab there. It is called Sentiment Range MA. And you can play around with it. Let me know what you think. I haven't found a way to integrate it into anything other than confluence with my normal strategies that I show you guys all the time. But I did find it interesting. Let's go ahead and turn that off. Let's go ahead and take a look at some of the chats here. So, yes, for those of you guys over there in the non-public chat, and the reason why there's a non-public chat is these guys are, a lot of these guys are in industry and taking tests through FINRA, which I assist with, and they're at work, so they can't go to YouTube and chat with everyone. But am I going to check on? Yes. So if you're just arriving, it's not just going to be Bitcoin. We're going to take a look at Dixie right now. In fact, we'll take a look at gold and traditional markets as well. So Dixie is threatening to put in a high on the daily here. This would be a lower high, which would be continuation of trend to the downside. And, you know, realistically, it's got some room to kind of play around. But if it does start to close below the lower first here, that's coming in at 105.57. If it does close below there, then we're looking for this to put in a lower high somewhere around the 105.50 area. And especially if it drops that wick low at 105.37. Below there, I would look to the lower second at around 105, to 105.10. And of course, below there, a swing of the lows at 104.84. If we do see that area dropped, we would be looking for a move down. I hope this is actually correct here. Yes. We would be looking for a move down to that 104.5, 104.69 area. You can see that below 105, we would see expansion to the downside again. I am not really too confident in that right now. I think that this might try to set up for, a lower high, higher low, and then take out the most recent wick high at 106. And if it does that, above the basis, we're looking for it to go, and which is at 106.05, so it's slightly above the local high. Then I would be looking for it to run somewhere around 106.5 to 107 again. Possibly, if it gets above 107.02 by the upper second, then we're looking to this SR level at 107.20 above there. I would be looking for expansion to 108, 110 region, quite honestly. Daily Stoke is, ready to turn here. 105.16 is the number to beat. This is mean reversion as it stands right now. So again, I would just be watching somewhere to, if we do see a higher low put in that takes out this lower high, we would have a trend break, right? So lower high, then we're looking for it to go test somewhere around the lows. But if it does lower high to a higher low, we look to the highs here. If it trend breaks, then we're looking to the basis specifically at 106 to the upper first at 106.5. Above 106.5, this thing's running 107. All right. Whether or not it gets above it and closes above it would remain to be seen. But if you do see it above 106 and 106.50 specifically to 106.55, I'd be looking for it to run its local highs. I would be looking for it to not just mean revert, which where you would want to see it close below and or reject would be at the upper first, and then come back down. I still think it would have a chance to just consolidate and try higher though. The daily, the 2-day is going to be the other one at 106. Any closures above there, that will turn to the upside. Now, of course, it's below there right now. So, but the Bollinger Bands on the 2-day are telling me this is a consolidation until proven otherwise. I mean, a breakdown below and a close below 105 will kick off expansion to the downside. And that's what, if you're bearish on Dixie, that's what you want to see. But this thing can just range for a while and then consolidate after the breakout. Again, I got to point you back to the monthly. This is a breakout retest on the monthly, so don't get it twisted. Breakout retests on the monthly is, it's retesting it in a strong position. This is not a weak position retest. This is a strong position retest. I mean, we have higher low monthly structure in the more macro time frames. Yes, it's been a downtrend, but this is a consolidation retest of, again, 2019, 2020. I want to bring that back up because I'm seeing a lot of people go, no, it's going to fall apart. Well, yeah, it could fall apart, but even if it fell apart back to this area, I can't hate it. Like, even if it dropped the freaking lows that it just tested and retested, dropped its current lows at the basis and retested these lows, it's still just retesting these highs over here. If it broke down, yeah, then we're looking much lower, 94, 95, so on and so forth. But the pinch on the Bollinger Bands is what's scary about Dixie for everyone in the markets right now. So it's threatening to put in a lower high, right? Oh, okay, it can put in a lower high, but it's in the middle of a giant freaking Bollinger Band compression. So you remember me saying this, for those of you that have been around a while, the trend is your friend until the end of the trend. And when the trend is unclear, everyone's in fear. Everyone's in fear right now because of this, and no one's really talking about it or addressing this because this is a cool down. This is a compression on Dixie, meaning that if it does expand back to the upside above the highs, especially, and gets aggressive expansion, that is a flight to the dollar. That is markets probably getting wiped. All of our favorite coins and everything, just liquidity drawn from them as everyone escapes to dollars, which means that there's probably every single macro analyst that told you to sell the low and will most likely tell you to buy the highs, who are always wrong. Well, their wet dreams will come true as markets crash, but of course they're probably going to be looking in the wrong direction. But yeah, man, that would be devastating for a lot of things. But we are seeing Bitcoin kind of separate itself from traditional markets. And, it's drawing back with Dixie, which is funny. And it rallied with Dixie for a little while as well. I can't hate this consolidation. This will build bullish divergence on the other side as well. I addressed this. Some of what I said I already covered in depth on Friday, but it bears repeating because for those of you that are studying for your FINRA exams, you're going to be dealing a lot with, Forex pairs and Dixie versus these other currencies and which markets are moving and where are them, where are you going to be putting the money at, right? So this is what is frightening a lot of people right now. And just to kind of give you a little bit more of a frightening picture, 106 is the pivot for the bi-monthly. Now, yes, it would disagree with the quarterly, but I had pointed out on Friday, if you want to go back and look at the Dixie segment, the quarterly could turn back to the upside. If we see this low's already set. It's a back test of the low being set, quite honestly, on the 2-month chart, which, if Dixie closes back above 106.27 by the end of the year, the upper second's fair game at 112 around the highs on a close. Above there, we're looking at this heading higher. It is painting a very large range look, but this could keep, running the highs and higher. And then, if we see a reclaim of that, then we start looking for a reversion back to the mean. But yeah, man, the quarterly's very strong as well. So higher low, it's been confirmed. 105.88. Yeah, the 106.17 confirmed it. This is just a back test. Fits above the upper first. Yikes. That's likely to turn because this is lagging. 112 is the momentum pivot right now. But if the monthly and bi-monthly continue to the upside here, well, it's going to turn that quarterly. And back half of next year is probably going to look real, real bad for markets. So All right, that's going to do it for Dixie. I hope you're all well and scared of that, which just means if you're a trader, you should not be scared of any of this. You're trading the volatility, right? You're trading the price volatility. You're not trading the price. So you have the ability to short, you have the ability to long. All you're trying to do rather is determine which is the higher probability play. And for the daily right now, a lot of it is looking a little extended. Let's go look at gold, which is getting a nice bounce off the lower second standard deviation. We referenced this on Friday's live stream. And, if it can regain the lower first at 1950, which it, to be fair, tested somewhere around there, 1949. So about 83 cents shy of 1950. If it can close above there, I would look for it to attempt for a technical low around 1958 to 1960. If it can trade back above 1965, be aware of where the basis is at 1970. You want to see it reclaim that area. It's that wick low over here from the highs before the lower high right there at around $2,004. Above that 1970 wick low right there, I would look to the upper first, somewhere around the close open structure at 1992 to that lower high, wick high at around 2004 to 2005. If we do see closures below the lower second standard deviation, keep an eye on this wick low down here. We did see the close open not tested. I almost said tested. We saw the high side of the close open of this order block tested, and that was at 1952. We dropped to the lower second, which was one of our main targets. Next area would be 1920 to the wick low at 1908, 1910 by the lower third. I would still then be biased towards this moving back to the downside a bit more after possibly another lower term time frame bounce. But we would have to evaluate if and when we see that. Right now, the opportunity is there for the bulls to kind of try to set a daily low, let momentum catch up and turn. 1984 is the current momentum pivot, but if we do see a daily low set on gold, realistically, you're looking local range, 1953, that wick low right there, to around that 1970. Closures back above 1970 around the basis, and I think not only would this be putting in and confirming a higher low in the more macro timeframes, going up the timeframes, but we're likely to see that daily turn and start to follow through as well. Now, it is pressured down still on the 2-day as well, and it's only just getting started, but this is where if the daily can set a low, start working back towards the 1953 to 1970 area and catching a nice reclaim on a close specifically, that's where we could potentially see close over close where we get a bullish momentum reset on something like the 2-day where it does something like that. So keep an eye out for that. That will only occur if gold can set a daily low. So, nothing confirmed right now. Still downside pressure. It's only just now bouncing off that lower second. So we do need to see close over close follow through and a reclaim, small reclaims. We need to see 1950 regained above there, the 1953.69 meme number wick low. So go ahead and mark that one on your charts to the upside. To the downside, closures below the lower second, I'm looking, like I said, 1920 to 1910 initially, and then we'll revisit it. The weekly is a higher high break, and, it's a bit of a long form consolidation, to be quite honest right now. So we do have our previous Friday pointer here, or arrow. Now, to the upside, the upper first is there around 1973. If we did see closures above 1970, look to the weekly. If we see closures above there, we would have, our higher high trend break to like a higher low. But still, this is fine. It sounds brutal, and it would be brutal for those out of position, but this thing is still fine all the way to the lower second at 1850. Now, how that would affect longer term momentum would be very bad, though. 1910 is the momentum pivot on the weekly. It's still trading above there. It's still pressure up. You can see that when looking at the 2-week as well. 1900. We do have a bearish divergence, to be fair, I would say that the easy portion of this move is played out back to the basis. If it's going to continue, it's going to go to the lower first around that 1900 to 1890 pivot, which could just absolutely destroy everything that I just said about the bullish scenarios, or would destroy that, quite honestly. But I mean, this thing is still bullish down to the lower second where it bounced recently. I would say any closures above that basis still looking fine. So that's 1940 right now. So I would keep an eye on that coming into the end of this week. We had the 3-week close open. We got, this close opened a while ago. 1960s, a pivot. 4-week is going to be a little bit different as well. So we did have that higher high break, but it's all in this cluster of wicks around the highs. We have the higher low. Not abnormal to see a pullback like this, but momentum is against the bulls right now, and any closures below that 1985. That's coming in at the end of the month, so it is worth watching that 4-week coming into the end of the month. And 1934 is the monthly, so above 1934, the monthly is going to turn back to the upside. We're getting really just a consolidation look right now. And it's all going to be about, what areas on the lower term timeframes can gold recover. So again, baby steps above 1950. It looks good to go test higher, and then we got to see where it closes. Let's go ahead and look at not economics. We're going to go traditional markets. We're going to look at the daily on Dow, which is up, looking to make a higher high on a close if it can stay here. It is testing into this gap that we talked about. So it's right on schedule, testing higher. And, it can, if it does reclaim this low here on a close, which it's trading right at around 34,350, I would look a little bit higher where it fell just shy of the 34,434 area, but it's the next big area to look for, to around 34.5 here, almost 34.6. Above that area, I would look to the wick high at this rejection at around 34.7 to 34.8. And then, of course, it's back to the highs around 34.9 to 35 up there by the upper second, which, to be fair, is quite a bit lower, actually. So that would be above the upper second, indicating that likely a reversal area if it got there, at least initially. I would be looking, right back to that upper first zone at around 34,000. If it can hold that to, 34,000, a retest of this high on any kind of a pullback retest of the breakout, looks good. Some will argue that we already got it back here on this higher low. Sure, you might be right. Momentum is starting to wane a little bit on any closures below 34,313. On the daily, though, we've seen Dow likes to march up against the overbought zone for quite a while. This would also, indicate if it does pull back from here, a first pass rejection at the bullish control zone of RSI as well. We don't have any in-trend bearish divergence just yet, so you're likely to see on, we've already had some highs put in that are, hidden bearish divergence, but they've been nothing more than corrective. So on that last correction, at least, and it's looking to push higher. So a little bit of a pullback to retest might come after, we've seen things kind of flip-flopping around. A pullback to retest would be just fine on NASDAQ as well to the upper first. So if we do see that, we have already seen it, to be fair. So it can push to the upper second at around 15,680, 15,700, which, by the way, would put it, above where it's currently trading, which is right around this high, this lower high, to this next higher high. Above there, we're looking to, not just the low side of this order block at 15.7, but I would be looking to around 15.8, almost 16, as we would continue to see the expansion of the Bollinger Bands here. I do want you to note that, with a really wide set of Bollinger Bands, mean reversion can get really ugly on these and still remain just fine as long as it's above the basis, at 14,840. And you preferably want to see like longer term time frame higher lows coming in around that lower first, as the lower second is below the most recent low. So that would be down all the way down at like 14,4 to 5. Yes, that would be a brutal drawdown. A lot of bears would be celebrating and wetting their pants, probably right into a massive bounce, even if it was a failed one. The momentum pivot is going to be 15,475, trading at 15,500 now, which was one of our main targets. So I would not be surprised to see a pullback, a gap down open, and it's still within this larger candle from Friday. If it trades above it at 15,530, then I would be looking for the next high there at 15,575, 15,6, and then we start looking towards 15,7 to 8. Below the upper first, which is at 15,250 to 260. Keep an eye on that wick low there at around 15,171. That's where things start to draw down pretty aggressively. I think back to the basis, around the $15,000 to upper $14,000 zone. And the weekly's a breakout. The weekly clear. Here's the thing. The weekly is strong right now. It closed above the upper first. It can come back and retest the basis around 15 to 15.1, even the upper 14s. I mean, crap. This thing can come all the way back to 14.10 on the lower first from the band perspective. Probably not from a momentum perspective, but you've got the downtrend break here. I mean, the next logical place to be looking is 15.6 to 8. At the wick highs to the close opens up here, and then above to, that's 15, almost 15.9 to 16. That is realistically that's the picture that's being painted by this particular structure. You can call it even, you could even make the argument that this is a bull flag, and I would not argue with you there. I doubt that it would play out like a bull flag, but if it did, holy crap. Dixie's probably impulsing to the bottom side. Lower standard deviations that I was talking about previously. In this case, we can see that 14,636, which is below that lower first, meaning that the lower first is fair game, at least this week, probably not into next week, but we could see a drawback. As long as it turned into a wick, you don't want to see closures there. That'd be quite a bit to give up. But, if you saw like a stray wick hit that area this week, it would not be anything too crazy. Lower first is where you'd want to find your primary support. I would like to see it push a little bit further to the upside before heading back even to the basis at this point. But basis at around 15,000 to 15,100 is just fine as well. Looks good, to be quite honest. SPY is the same thing. This is a breakout. I mean, this is a trend breakout. You could make the argument that it's, a bigger bull flag. It's no. This is quite a bit more of a range setup than anything else. I do like the back test of the basis band here, giving us that upper first target there at around 450 or so, to the highs there at around 453, 455. Above there, the upper second's fair game at 460 and beyond, quite honestly. But we could, again, upper second, lower second are going to be, in most cases, reversal or continuation. So that would be, eyes on, because it could end up being a reversal area again. But in this case, because we've already seen a trend break, you're looking for higher lows. So even on pullbacks, it's fine to the lower first at 430, 427. Even the lower second, it would be ugly as hell back at 420 to 415, 16 area, but it would still be okay. 421 is the momentum pivot on the weekly. You can see it tested, get an initial cross down, and then it doesn't complete it and just bounces off of it. So that's one of the things that you do need to be aware of when looking at momentum. Yeah, it's also in, confirmed contraction, cool down phase. So above the upper first, we'll see re-expansion 450. Below the lower first on closes, specifically at 430, we would see expansion initially, or re-expansion, but not really too enticing of a setup as it currently stands just yet. The daily is much better. Momentum pivot's going to be 440. It's trading, 1.5 above. Upper second is there at 445, 446 area. So it is going to be coming in right around this low right there. This is where we got the move to the upper second, a little bit of a higher low to a lower high, higher low, lower high, and then down. So very, we had trend is your friend until the end of the trend in the macro. This was a downtrend on the longer term time frames. The daily kind of shifting trend, scaring the crap out of everybody. But the conditions are pretty simple. Above 453, it's going to head up. Below this last low, it's going to head down at minimum to these lows. And if it breaches it, it's going to head down more. Now, this area right here at 438 to the open structure right here around 436, going to be a big area to watch because that's right by the upper first standard deviation. If it does drop that 436 upper first, keep an eye on this wick low at 433. Below there, we're looking at that basis, which just happens to come in at 427. Let me point you to 427 on the weekly. Look at that. It's the lower first. So keep an eye on that going forward this week. You do want to see, on a reclaim of the upper first, you want to see it push through to the upper second at minimum. So that'd be, the 445, 446 region. If it can reclaim this lower high over here, well, technically, you could take this whole area above 450. It's looking good. Again, 450 is going to be the upper first on the weekly. If we see it close there, then we can raise our targets to around that 460 area. So that kind of does it for the bulk of the analysis today. If I wasn't tripping over my sentence structure and words all day today, it probably would have been a pretty decent stream to listen to, huh? Let's go ahead and go degen chart. You can tell me all the things I missed. Actually, you know what? Let's go ahead and take a look at Bitcoin real quick here. Again, because I do think it's worth pulling a fib. This is log scale, so you want to make sure your fibs are set to log and just get the context of where we are. So fibs on log scale. The 618 is at 26, $27,000, 26,951, right? We already pulled this last week, but context is everything. Breakouts above the one spot extension do beget targets to the 1272, and I really want you to note where the 1272 comes in, right? That is the 48,240 area. The 1272 is slightly above there at 48,530. So you do need to understand that even if Bitcoin does kick off, like what I was saying earlier, does kick off expansion to the upside above the upper second standard deviation like it has done in the past, it's likely to run to new all-time highs. But this is the first time that we've had significant resistance overhead in an area that is also confluent, obviously, with this 1272. You can note that the next big area would be the 1414 at $55,000. And above there, we've got the 1618 coming in at 66,000. And then the 1786 it would be new highs at around 77. 1888, the famous Torque 1888. If you're not familiar, that's a user of and friend in one of my chats here. He has famously had a ton of calls with the 888 and 1888. So we just named it after him privately there. It is not, I highly doubt it's him that came up with that. I have seen it elsewhere, but in terms of popularizing it with our group, he is the one that has done so. Big area that I do also want to note to the downside. We see Bitcoin flush at any point. For some reason, it gets below the basis. Keep an eye on that 50% at 24 to 37. Why do I bring that up? Because looking back at the quarterly, you want to know where that momentum pivot is, and that's at 24,400. So, yeah, let's go ahead and go degen chart, and we'll do the 30-second degen chart here, and turn on the tunes, and go from there, and we'll poke around the chats here. If you have any chat or any questions that are relevant to what we are talking about here, please go ahead and put them in the various chats. Let's go ahead and get the music back on here to cover for the silence while I read. All right. Hopefully that's going through and out to all the various streams. All right. Let's take a look here. Yeah. So for those of you that are just getting into training, some of you are new to the financial world, but you have degrees, right? So you have your business degrees, you've maybe even taken courses, your economics about charting theory and stuff like that. You're going to be starting you're going to start with your basic FINRA exams. So you're prepping with your SIE. Yeah. And a lot of this stuff will make sense over time. It's going to take a while to catch up to where you see some of your peers that are taking the Series 24 and 57 exams, right? So don't be discouraged when you see some of the more advanced topics come up from them. Your learning path will take you all the way through, and you may have visited some of the theory behind trading in terms of cycles when looking at charts, but when it actually comes to positioning on a quarterly, monthly, weekly, and daily basis, it's a very different story, right? You take all of the macro perspective and analysis that you've learned along with the fundamental analysis that you've learned to do, but you will end up with a dual skill set, because you need to understand how price works at auction. And that's all this is, right? What we're watching on the 30-second chart here is an auction, right? It's a live auction. And understanding the auction is what you're trying to do, right? And the reason why the methodology that I teach with trend, support and resistance, and volatility are the main components that then make up momentum. Those four key pillars of trading are, what are the defining characteristics of the entire auction. That's why the trend is your friend until the end of the trend. The trend is unclear, everyone's in fear, but that's where you then move on to the second point, right? Support and resistance, right? They all go hand in hand, but and the trend is your friend. The trend is your friend till the end of the trend, either to the upside or the downside, right? And you're going to be eyeing main areas of support and resistance. And when the trend is unclear, you're looking to support and resistance, like where are you ranging between? Like Bitcoin's in between two major weeklies, 36.2 and 37.7, right? 35K monthly, right? And 38.5 monthly as well, right? So big levels and very important areas. So you have to observe the auction around those areas to really, between those first 2 points, your trend, your support and resistance, and then the volatility within it. You see the volatility is cooling down, right? Bitcoin on the daily, for instance, is, volatility is still moving to the upside, but, we see a compression in the Bollinger Bands indicating, right, that volatility has cooled down. We had a nice volatile move up. Consolidation is sideways and up. So yes, volatility remains high or elevated, but it's essentially just been sideways and up. And now we're seeing a little bit more downside. For the past few days, it has not been as volatile, right? In the lower term time frames, there's been volatility, especially, to the spike up to 37.4 and then down to 36.5. That's $1,000 move on the lower term time frames. Looks very volatile until you start moving out to higher term time frames. But that volatility, that trend, that support and resistance, that volatility all create momentum, which is what I prefer to measure in Stoke. But you can use whatever momentum indicators you like, right? But just understand that it's those first 3 components that create the momentum. So it's your trend, your support, resistance, your volatility create the momentum. And you can have big downside moves, even in big volatile lower term time frame downside moves in Bitcoin from the 4-hour perspective that just further cool down volatility on the daily. I mean, the basis band is there at 35,400 or so, but that would be, volatile expansion of like the 4-hour to the downside is nothing more than mean reversion on the daily. And that's where you need to understand the context as it relates to the longer term time frames and the shorter term time frames. You could see a volatile downside move on the daily, right? You could see expansion to the downside. And from the weekly perspective, you see expansion to the downside on the daily. Well, I would say 33,000 is the main area you need to watch out for. So I would say you probably don't want to see expansion to the downside. You want to see a reversal if it was to head towards the lower second from here. But it would still be considered mean reversion on the weekly all the way to the basis, right? It's mean revert back to the basis. It's currently at 29,600, 700 area. And realistically, if Bitcoin's closing anywhere above that upper first, it's likely going to end up right there at those ever important weeklies below a level that's only been tested once since the original breakdown, that daily, weekly, monthly at 31.8. So I would not be surprised. It's a big level, but I would not be surprised if Bitcoin were to mean revert really hard for it to crash through that level and head towards those weeklies, because those weeklies are strong, man. That's 2 major highs on the weekly at 30,600 at 300. So it's definitely not out of the question. But when Bitcoin's all the way up here above the upper second, you still have volatility expansion. You've got, and right now you've got full trend, right? So we've got, a lower high, higher low, higher high. You do want to see one more higher low to keep, moving on and then take out this high for full trend to be hit. But this is an uptrend, right? We were moving from a downtrend, had lower lows, lower high, higher low, higher high. So what do you look for next? Higher low. I mean, you have to look for a higher low anywhere above, 26,500. If it breaks down below, 26,500, this is still just a giant consolidation then, because there was a giant trend break in between. And then we most likely are waiting a lot longer for new highs, right? Hope that helps. Yeah, I know you guys are brand new to a lot of these concepts, but yeah. Yeah. Well, it's when you major in economics and minor in computer science. So you've got the blockchain stuff down. Now it's time to learn how the auction works. Yep. Cool. Glad I could answer that for you. Yeah, because I don't get to talk to you guys until you're till you're doing 5724 exam prep. So yeah, if you show up for these streams, you'll learn a lot of the concepts, and or you're gonna see and hear it a lot. Yep, cool. Yeah, a lot of the concepts that you're gonna prep for in the exams, you know, this is real trading. You're gonna prep for a lot more than this kind of stuff. You need to know all kinds of stuff. Yeah, so just one thing at a time. Take your entry stuff, take your SIE exams, and be good. Yep. Cool. Let's look over in the public chats here. Not seeing too much going on. See a lot of people watching over here on YouTube, but not many chatting. Hello, no name, Bobby, Ivan. No real questions here. I don't have any update on Discord right now. I'll let you know when I do. Yes, the fib levels are beautiful, aren't they? They're falling right into place. Almost seems inevitable. The only way it is inevitable is if we start seeing closes above that monthly upper second on the monthly time frame. Not just, you don't want to see a swing of it. You want to see it close above, get that expansion, then we start looking to those fib levels, which just happen to line up nearly perfectly with support and resistance. So, yep. Okay, so the yeah, so somebody had just pointed out in one of the other chats, like, hey, didn't that 888 that you said line up with the lower first? And it does, yeah. It does. Yeah, you pulled the same fib. I see. Okay, cool. Yeah, it lines up with the lower first, so go figure. That's at that 34 2 to 4 area. Yeah, good catch. I wasn't looking at the daily at that point, but yeah. Yep. If you want to take the local move, yeah. There's one of two ways you can do it. You can do it log. If it's a daily, you can do it log or linear. Now, I will tell you that on TradingView, so like if you want to take the last high or low to the most recent high or high, or this high or low down here to the most recent high or high, and you have it on log, you're going to see the 618 lines up perfectly with the lower second standard deviation, right? Now to verify that, you know, a similar outlook, oh, by the way, the 50% Fibonacci is at 31,755, which if you scroll, it's the highs, right? It's that 31.8 area, right? You want to see that area hold up on any moves back down. Now this fib is set to log, so if you want to look at it on linear, you do need to go in and uncheck fib log scale, and then hit the L over here to go back to linear. You'll see that the 618 doesn't, on linear scale, doesn't line up quite as well with that lower second. It might close over close. You can see that things are holding that 888 on the daily right now. On the upper first is moving into that area. Basis is moving into the 786. Lower third is down there at the 50%, which is at 32,268, right? So it's a little bit different look because of the calculation for linear versus log. Does it matter? Some people prefer just to use log on the weekly and higher time frames. You know, it doesn't really matter to me how you want to use it. It's all about the confluences. Right now, the confluences are on the log chart, right? So you're seeing that, and if you are going to use log, you should use the fib on log. It's going to give you nice clean levels. You can see how they line up, the 191 being the lows down here. Yep. For that local range. And then if you want to pull in closer here, right? You take the local range actual low structure to the highs here, and you can see where everything falls into place. So from the wick high to this most recent higher low is Probably something, you know, when it gets a little bit more local like this, you might want to just switch it to linear scale, right? Because it is local. So you go ahead and switch it to linear and see where things kind of line up. 618 just below the upper first. 50% is cutting across the highs there, you know, 35,700. So you want to see it holding above there basically. Otherwise, it's down to the basis. 382s right there as well, around 35,000 to 35, 4 to 5. Yep. Yeah, so I've gotten a lot of requests. So I also got a request from, I believe, Bobby, because he's got some friends that are trading, but, you know, just practicing and learning new stuff, I believe, that he believes that I should, and I agree with him, that I should go through and have a dedicated video going over the trend, support, resistance, volatility, and momentum, and tie it all together. There will be a series of videos. You know, I had some recorded, but I've come up with some better ways of explaining it after talking to everyone. So I'm gonna re-record those. You know, trend is fairly simple to understand, but I have a unique way, or not a unique way, but I have my own specific way of describing it so that people understand, as especially when it comes to trend reversals and swing fail patterns, and then tie that right into the support and resistance stuff. So I should have that stuff recorded, and it'll be publicly available for free. Not, you know, it's all free content. I don't have any paid stuff. It's my public service. Yeah. Cool. Any other questions from over there? I'm glad the new guys are here. They're asking all kinds of questions. All the other guys are like, yeah, we've heard this a million times. Cool. I mean, I've talked about trend, support, and resistance, and explained these things over and over again, all of these concepts, but you know, it's all within various live streams, not easily searchable, stuff like that. So doing 3 a week, that gets buried pretty quick. Yeah. Cool. Yeah, I touch on it quite often. Yep. Cool. All right, well, I think that's going to be it for today. I don't have too many more questions from over there, do I? Okay, some of it's, yeah. Okay, yeah, if it's if it's anything exam related, we'll take it off stream because it's just not relevant for a lot of the people listening publicly. Yeah, if it's anything Series 24, 57, SIE, yeah, it's just boring for a lot of those people who aren't. Yeah. Cool. I have a question from public over here. Ivan says, can I ask your thoughts on histogram? What histogram? You got to be more specific. There's tons of histograms. Like just histograms in general? I mean, histograms are useful, but it depends on which context and what you mean. Let's double check one more time as we come into the 4-hour close here. Yep. So we just opened that 4-hour candle that we spoke about earlier. We see it closed above the upper second standard deviation. Tested the upper first, kind of chopping around, getting really wicky. If it can close back above that lower first, did I say upper first? Closed above the lower first, tested above the lower first. If it can close above the lower first, I would start looking back to that basis band again. So lower first is at that $36,900, $37,000 area. Above there, Yeah, 37.50 is going to be that. Ivan, I have no idea what you're talking about. I don't know every indicator. You would have to point out exactly which indicator it is and what it's doing, what its purpose is, for me to understand if that particular histogram that you're looking at is relevant to anything. So, if you don't know what an indicator does, by the way, don't use it. If you don't know what it is, how it works, you shouldn't use it. Focus on the basics. Yeah. So 4 hour will turn to the upside on any closes back above 36,856. So, above that lower first, about 36.9, starts to look like a little bit of a lower term time frame bouncy structure. That 2 hour also closed. Got to close open. Nice move back to the lower first, right where price is right now at around 36.8 to 900. 36.741 is going to be the momentum pivot there, and this all will play into the next 4 hour close, which is closing with the 6 hour, which is currently pivoted at that 37.162, but seeing that nice bounce off of the compression of the bands here. I do suspect things are going to continue to compress. It might play around in this $1,000-$1,500 range, but until we see closes below the lower second, not too much further downside than I'm looking for, and that's around 36,550. Below there, then we're starting to look down at a 36, 35 and a half, so on and so forth, or a retest minimum. Yeah, it'd be 36,550. Below there, then we're looking for it to test down further, possibly get expansion. But for right now, just a consolidation, a little bit of sideways going on here. Okay, man, this is some inspirational ass music going on right now. Let's see. Let's go back to this one here, and we will play out. All right, so I think that's going to do it for today. We don't have any other questions going on here. We'll throw in the DGen chart. You can enjoy the tunes. I'm going to be leaving the stream up for a little bit here, as there are people that are watching that are behind a bit. And when they're behind and I end the stream, it does reset where they're watching, so they have to reload the video where they were. So I will give a little bit of time for catch up. We're gonna do about 12. For me, it would be 12. Let's go 12:30. Make it an even 2 hour stream here. Let's go ahead and start the timer. And I want to thank you all for hanging out. For those of you that have been here since the start of the stream, thanks for hanging out. You can hang around and enjoy the tunes near the end here. And I will have a Bitcoin in 60 seconds video later today that will be covering the weekly and giving my thoughts on that coming into, of course, this weekly. And I will be back on Wednesday with a live stream and probably have some daily Bitcoin in 60 seconds videos for you to catch up on throughout the week as well. I want to thank you for hanging out with me. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.